Yields are the story today. Joe, you said on Monday, if I recall, you didn't like the setup for this week, in part because of yields. And here they are moving higher again. And we'll get to NASDAQ, Tesla, everything else coming up. But we have to start here.
4.25 for a 2-year. And that's where Fed policy is priced in the Treasury market. That's not good. We see the 2-year going the wrong way. So the setup is a poor one. And again, I'll mention, underneath the surface of a lot of earnings that are going to be reported this week, there is a tremendous amount of Fed speak. Raphael Bostic, Loretta Mester, Patrick Harker. So we're going to hear a reiteration, I believe, of a very hawkish positioning. We had the news overnight about European inflation. So back in the conversation,
very
once
hawkish
again,
positioning, though. I bring up Bostic yesterday. Was like, all right, one more in May. Market already knows that, and then I'm done.
I think they're going to
hold.
Yeah,
how hawkish is that? I mean, the market kind of knows it now, don't?
Again, that's why I think this week is a week in which we're running in place. Still think we're going to 4,200. I think the catalyst for that comes next week in the form of mega caps, but I don't think the Fed speak is going to do anything to advance the market towards 4,200 this week.
Liz, I mean, the VIX is at 16.5. Unbelievable. There's just not much volatility around. There's what people would suggest is complacency abound for whatever reason. How do you see the market here?
Well, there's volatility in the bond market, and there continues to be this contradiction between what's happening in equities with a sleepy VIX and a really excitable MOVE index, which is the bond volatility. And it used to be the case that bonds knew things before stocks did, and that sort of went away for a while. Maybe it's back. Maybe we're in a period now where bonds actually do know that volatility is coming and that volatility should be higher. I do think that there's some complacency. However, I don't want to accuse people of being complacent. There hasn't really been news to do anything about.
Yeah, no, that's
true.
And
earnings season started pretty strong. We were fearful of big banks' earnings and commentary, and we came out of the gates pretty good, which I think boosted sentiment and sort of calmed everybody down. So we're in this place where if we get some little positive news, the market probably does reach for 4,200. But the negative news is what we're all sort of on the edges of our seats for. I think if we had a drawdown here, it would surprise no one, right? So we're all positioned for that. We all keep talking about it, yet we sort of fight our way higher and stay in this range. Well, there isn't anything or any big reason to do otherwise.
Is the market so lot more vulnerable, do you think, because breadth overall has been kind of lame? In fact, that you have, as we embark on these mega cap companies that are going to start reporting, Tesla in overtime tonight, it's been top heavy, tech, comm services, the bigger market caps are the ones who have really carried the market. Is it more vulnerable as a result?
It is. It's vulnerable because you look at the small caps, they've all rolled over. You look at all the leading indicators, they're all rolling over. But the large caps are we've seen this story happen before. And the question is, when money comes into the indexes, that's pushing up all these stocks. The active managers or other positioning are kind of saying, hey, we're kind of waiting for the market to come down. So you really, the path of least resistance is down, but you're not seeing any of that because we haven't had any catalyst to do it, to Liz's point. But I do think over time, with earnings coming down, it's going to be very hard to sustain these levels, at least in the next 6 months.
I mean, you've been looking at this very issue, right? Top-heavy market, the kinds of stocks underneath the surface that have rolled over. You wrote about it for CNBC Pro. So you're thinking about it. How's it shaping your view then overall?
Well, I think to Surat's point, if you think about small cap and mid cap rolling over, I would say that they didn't roll from anywhere. They've been rolled. They've sunk for a long time now, and the differential between the large caps and the small caps is so huge. If you look at the way Apple has performed, it's up 26% year to date, and you can fit all of the companies, all the listed companies between 1 and 5 billion into Apple. The market cap close to $3 trillion is equal to all 1,200 companies in that range. So, I think if you get a boost, if the tech names do well or better than expected next week, the market can keep going higher. And if they don't, that'll be disappointing, and it can drag those names down. And that's not what the market has been expecting.